Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll top my Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you guys buy it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Hold on. I know I'm late. We got the news coming through here. Man, this is moving. But what is the core PCE? Oh, interesting. Core PCE prices advanced 5.2 versus an expected 5.5. That's after a pretty good drop overnight in the treasuries. For some reason, non-financial juice, it's not updating my numbers here. I heard him say it. Let's see here. Initial jobless claims 180 versus 180. So none of these numbers, from what I can see. Oh, wait. What about the GDP? Okay. GDP was negative 1.4 versus 1. That's probably why they're buying. I don't necessarily want to FOMO into something here, especially with the micros having like zero liquidity, but cool. That US GDP quarter over quarter advance being negative 1.4 versus 1% is, it's not the biggest discrepancy in GDP that we've ever seen, but is, you know, those larger discrepancies happened during the pandemic. For the current time, for them to have been that off is a little surprising to me. So today, you know why I'm late? You want to know why I'm late? There was, I was, you know, I watch a little bit of TikTok while I'm eating breakfast. Well, first of all, my alarm did not go off. This happens like once a quarter or so. It seems like I don't know if it's like they update the application and they update Android and the application doesn't keep up or whatever, but my alarm just will straight up not go off. I guess I need to get a hard alarm. Anyways, I'm watching TikToks. Peter Schiff has a TikTok now. And he's all like, oh yeah, Federal Reserve, they're not actually going to raise rates. And that will put pressure on the dollar. And I'm like, okay. You want to go short the dollar, huh? You want to go short the dollar. Okay. Oh, okay, Pete. Oh, if that's what you want to do, Peter. Good grief. That is not stopping there. that number might be a bigger deal than we realize. Well, but I mean, we're retracing an overnight move, so that's kind of, yeah, that's going to be part of it. But man, I went outside this morning. The dog. I had to go outside to get something for the dog because we left it outside, and I got pollen on my face. Just all I gotta do was step out there and get pollen on my face. Whoa, 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 whoa. Shares of ARK favorite Teladoc destroyed by more than 40% after earnings meltdown. Jeez. Okay, well, we've been watching this for a little bit. Let's try and go through the charts now, okay? The treasuries, yes, had a little bit of a fall yesterday. Like it was like they jumped around a lot, and then towards the end of our session, they fell down. I actually did make some of the money back that I lost yesterday, so that's cool. And then we had another further drop overnight, but this GDP seems to be messing them up. Also, we've got a 7-year auction today, which is a significant thing, right? So we'll look for that. I am seeing like decent amounts trading here in the 119.19 area. Okay, S&P 500 getting clipped a little bit yesterday, but this morning higher off of the Facebook earnings. So, or the picture that maybe we're starting to get is that perhaps the large downside movement was largely driven just by the earnings in Facebook and so forth being really bad. Google earnings being bad. When do we get Apple today? Let's see here. Let me go find it. Yes, Apple and Amazon are today. So that's going to be a key driver in the equity indexes. Moving on. Oil still within the range. Natural gas taking a big jump yesterday, but giving up some of those gains this morning. Silver and gold continue to suck. And Kappa's still in its range. Hmm. And then, I already gave you a hint of what's going on over there. Yeah, okay. So Bitcoin continues to follow the NASDAQ, and the dollar continues to be strong. So that's what we got set up. Come back over here. Okay. So that's coming back pretty hard. Let's just kind of watch this a little bit. Let's just note that there was a decent amount of volume at 20. It kind of looks like they might come back to this 13.5 area. Was that? Wait, where's that? 13.5? Yeah. That was just the price from before the news. Russia's Gazprom says Poland is still buying Russian gas from Germany. Oh, is that what it is? Is you just buy it from Germany? I need to watch that CoffeeZilla video about the crypto guru talking about Ponzi schemes, inadvertently describing a Ponzi scheme. Is there anything else I missed overnight? Some technical analysis. Dude, that whole thing. Yes. So did you see this whole thing yesterday with Facebook that like they had a false earnings were released early, and then their earnings ended up being good. Awfully suspicious. Oh, what's Nassim talking about here? Show this thread, please. The implied probability of Twitter being bought by someone is 50%. The implied probability of Twitter being bought by Musk is less than 50%. Very rough calculation. Twitter is less than 10% NASDAQ over 12 months and about 10% lower than Musk's acquisition price. But if you use Twitter's relative price from January, implied odds of nobody buying it at 25%. Okay, I don't get what he's. I don't understand what you're saying. It's too sophisticated for me, Nassim. It must be this whole thing that if you go on a Bloomberg terminal, they say that the chances of somebody buying Twitter are 25%. So. The definitive study of El Salvador's Bitcoin experiment. What does it say here? Leveraging this data, we document how, despite the government's big push and a large fraction of people downloading Chivo wallet, usage of Bitcoin for everyday transactions is low and is concentrated among the bank-educated young and male population. Yeah. That was weird. Oh, Fauci clarifies U.S. is out of the acute component of pandemic phase. Gotcha. Because the pandemic can never end, right? Okay. Well, you're not getting very good prices here in the 10-year because the 30-year ZB did not pull back nearly as much as the 5 and 10 did. So flattening, I guess, but it really is quite the miss. Yep. Amazon and Apple. It's a big day for the earnings. Like if either of those come out and their earnings are bad and they get punished for it, then this thing is going to take another leg lower, and then you're going to have a bunch of options and everything pushing it again. Your thoughts on Euro USD falling immensely and is a gold standard rumors? Well, so I'm not 100% sure on the individual currencies. So something that I didn't mention, by the way, today, important, is that the Japanese yen took a huge dive overnight because they came in and did yield curve control. So that put pressure on the treasuries. So we've got a really complicated trade in the treasury today, right? Because we got weak Japanese yen, but then we also have a 7-year auction which is positive, and then we also have a GDP miss which was positive. I think that the overall kind of suggests that interest rates need to chill out a little bit, but we'll see. So I don't know what's moving the euro per se, but what we're seeing overall is just the dollar is really strong. Everybody continually talks doom and gloom about the dollar, but you know what? Everything that they're talking about is like way far out in the future. This distant future that, they continue to talk about for 10 years, but never actually happens. And then the dollar gets strong because you know what? When things are bad, people want to be in the dollar. They don't want to be in Russian rubles or Chinese yuans or even gold at this point. The gold one is one of the biggest surprises of the past year, I think. Really, like, I was a little skeptical about gold. I got in on some silver because I thought it was oversold, and I thought that it would be wise to hedge, but it hasn't performed very well. It hasn't performed very well. Yeah, it's just so many people were talking about that, but it comes into, it's all speculation that drives some of those things, and the speculators ain't buying that. They're buying Bitcoin. Is dollar at a double top yesterday? Well, I think that the dollar is awfully high, and that if you were going to go for a short, maybe this would be a good spot to do it. But at the same time, the trading the dollar is not really something that excites me. You know what I mean? It's not really something that excites me. So I don't know. Like if I was gonna take a trade like that, it would be, I would rather be like going long NASDAQ or something like that if we were expecting all of this to reverse. Yeah, there's another little drop lower. That time the 30-year really went, so dollar is strong when nobody wants rubles, and Europe weakness. Yeah. Well, and let's also remember that it sure seems like the Europeans have been much more bearish than the US, right? And it's totally understandable why they would be, right? You'd rather lock in cheap euro for a trip. Oh, well, okay. If you're just going to transfer your dollars straight into euros for a little bit, maybe. Jeez. Are they going to push lows of the day? If they break 11, then I am really uncertain what to do today. My general feeling would be to go long bond, short yield, but if the pressure, the selling pressure in it is enough to cancel out that news and push us to new lows, I suppose we could wait for like a push down to what, sputter out. But well, there's a little bit of volume happening here at 12.5, so that is likely. I mean, that was where we had where we were from before the news, so there's a lot of volume. This might be a good spot where like the volume profile might not tell you the right thing. If a liquidity form holds, it looks like it might be more around 12.5. They might just blow down through the bottom though. Let's see here. What does Mohammed A.L. Iran say? A big mess on U.S. GDP with a negative growth rate. Analysts will pore over data to assess the effects of inventories, COVID, inflation, fiscal, and a weaker international context. What's clear already is a further complication to an already difficult policy outlook for the Fed. I'm you know what? I'm not so sure. To be honest, here's the thing. Here's the thing that I don't hear, that I think is really important, and that a lot of analysts are missing. And again, it comes down to this thing that like a lot of the analysts that get popular on TV are just too ideological. Like Peter Schiff, man, I wouldn't. I'm a little weary about stitching his TikTok and making such a bit, picking up on such a pedantic thing. Like he says that the dollar is going to go get weak, and right now it's really strong. But I mean, he's been saying that for a long time, and the dollar has been strong. So like, can you trade off of what he says? Hell no. You can't trade off of what he says, right? Robert, who's the worst out there? Robert Wright. Oh my gosh, that guy is such a clown. Oh, I can't stand him. He's just dead wrong about everything. And then when the market proves him is wrong, he just moves on to some other different distraction. It's just hilarious. Anyways, what was I talking about? Oh, right. The thing that nobody's talking about is that Federal Reserve policy is so easy that if the Federal Reserve raises interest rates like double and triple basis point hikes here until the end of the year, we're still only getting interest rate policy back to neutral. Like if the federal funds rate was 2% annual interest rate, and everybody's acting like that's like the end of the world. It's just hilarious. Okay, well they did bust through lows there, right? So previous low was 11. So I said if they bust through the lows there, I'm not quite sure what to do. Looks like you could maybe buy it right here for a bounce. But you probably don't want to trade against the trend. The S&P 500 has reacted quite oddly to this. There was a spike and they're coming back down too. So this is still sorting itself out. Oh, Jack. I was like, what the hell is Jack Posebiec talking about? I'm not the one who shot and killed the wife. Oh, he's talking about Alec Baldwin. Okay. I don't particularly care about that story, but whatever. Bonds back to lows. Transitory recession, says News Squawk. Yeah, right. The recession is transitory, guys. Russia says Ukraine is neutral, normal now. The majors. Yeah. Okay. I haven't heard hardly anything this week about Mariupol and the guys stuck in that factory and whatnot, the steel plant. Like, you would think that they would be talking about, that there's still fighting going on there, or that they went around it, or what. I don't know. Ian Shepherdson says recession. Well, okay, so let's remember a recession is 2 quarters of negative GDP growth, right? Yeah, maybe we're going to have, maybe we actually are going to meet the technical requirements of a recession, because it kind of looks somewhat likely that Q3 could be negative. Finally reset your sleep schedule. Hey, good. We're glad to have you back, G59 fan. You make me want to buy a new mouse and keyboard. You know what? This mouse, it has a wire on it. And all of the cool kids have these new wireless mice with holes in them, These Swiss cheese mice that are lighter and stuff. I don't know. It just makes me feel like left out, But I like it being pink. It makes me feel, young and powerful. What? Donald Trump says he'd be in the White House instead of Mar-a-Lago if it weren't for McConnell book? Oh, okay. Okay, if you say so. No, it doesn't have a ball under it. It's got a really good sensor. It's got a really good sensor and a very effective shape. They make them all. They make that company. It's a Zowie mouse. They make them all like to fit your hand and stuff. So they've got a bunch of different sizes and things. They know mice. I kind of been waiting for like a better recommendation, but I don't know. Like, it works really well, and the cord doesn't bother me as long as the cord doesn't fall off of the back of the desk. Man, they're gonna go lower, huh? Will he run? Will they let? It's a good question. I'm really concerned that what's going to happen is he's going to run and he's going to lose the primary. Like, no joke. I really think that it's within the realm of possibility that if Donald Trump runs, he will lose a Republican primary. It could happen. It could happen. I had, you know what? I was late, and I'm noticing that when I'm like concerned, I start eating more sugar because I'm like, well, I need to get the nutrients in my body, but I don't think I should have eaten sugar this morning. A cinnamon roll. Oops. Okay, well, anybody want to buy the treasury now? Trump was good for what he exposed, but I don't know if he'd win again. There was a mixed bag, right? There was good things about Donald Trump and there was bad things about Donald Trump. I think the thing though that in the end really doomed him was that when it became clear that he wasn't going to win, his staff started to, I mean, he already had a problem keeping staff, but the staff all jumped ship. And then he really started doing dumb and crazy things. And now he's all on his own again. And what has happened is that in those last 4 years, he has really isolated himself in an information bubble, right? Before, he was actually really, you know, when he was like a super popular figure on Twitter, I suspect that a lot of the information that he was getting was really more from the left side of the aisle. Like he was a lot like me in that I sit and I read liberal opinions all day and scoff at them. That's what I tend to do. Okay. And I think that at the beginning of his presidency, Donald Trump was like that. And by the end of his presidency, he became the person that just reads 4chan and patriots.win and only gets conservative conspiracy theory stuff. Because the things that he says now just seem like so off kilter with like the electorate sense. It was like all of a sudden he went from this political genius to this complete dunce. I like a grain oats cereal, Truth brand. Anyways, and his Truth Social website is, by the way, something interesting about that one is they said that, you know, they've seen huge swings in follower counts for conservatives on Twitter, like Donald Trump Jr. added like 20,000 and all of these liberal people lost 20,000. But then another thing is that a lot of people have been downloading Truth Social. It's like one of the top apps on the the Apple App Store. And then there's Mastodon, which is kind of like a replacement for Facebook that's decentralized, had a ton of like hundreds of thousands of signups. Now, who knows? That could be bot activity. A lot of people are saying that they're exposing censorship that was on Twitter. But I want to present the theory, just the theory, okay? The theory that maybe actually all of that activity is indeed organic and is just a result of people reacting to the news. Thoughts on higher interest rates crushing or destroying the real estate market? Well, I think that in the next 6 months or so, that you probably will see real estate prices cool down or drop. But a lot of people seem to think that this is a major bubble and that the real estate market is just going to completely crash and yada, yada, yada. And I really don't see that happening. I really don't see that happening because supply in the real estate market is still very, very low. Interest rates are still comparatively easy. Okay. And people still have cash. So yeah, I think that there's still going to be really solid demand in the housing market. It's not going to be crazy. It's not going to be like, you know, as soon as the house goes on market, there's 50 people putting in above market offers, bids and whatnot. It was just crazy. It will go back to a normal market, but prices aren't going to be hammered that much. Prices aren't going to be hammered that much. Unfortunately for anybody looking for a house. Let's see here. Jason Furman says, don't freak out about the GDP report. The underlying inertial components were strong. The headline was negative 1.4% growth at an annual rate, but inventories subtracted 0.8 base pp, and net exports subtracted 3.2 pp. Consumption, fixed investment, and key domestic demand components were strong. Oh, okay. So we must consider that part of what may be going on here was people reacted to the initial number and it came back because other people said, oh, actually, it's not as bad as it seems. It's not going to crash, at least not hard, but it definitely won't crash since firms are invested in buying up all property. Subtracting, I don't know what they mean by PP. 0.8 pp, but essentially he's saying that the reason that GDP for the quarter is negative is because U.S. exports continue to be dismal. And hey, with such a strong dollar, man, it's so funny. Like the thing with Peter Schiff, like, because he's really trying to make a bigger kind of prediction, right? I think that over the past 10 years, he's been trying to make a prediction that is maybe something that would play out over 30 to 50 years, right? But at the same time, the market at key points doesn't do what he wants. And so he says, well, we'll get inflation, and then inflation will put downward pressure on the dollar. And that hasn't been what has happened. We got inflation. The market largely shrugged it off. And then when the Federal Reserve started, could no longer hold back and had to start raising interest rates, everybody flocks to the dollar. Everybody flocks to the dollar. And then what happens? Exports are bad. So really, if there was some downward pressure on the dollar, would maybe we be one of the best things for the U.S. economy right now. Goldman Sachs CEO Solomon, the underlying U.S. economy is strong at present. I agree with them, but listen, I remember in 2008 people saying that, right? The fundamentals of the U.S. economy are still strong. And then we had a huge recession, right? The problem is that those fundamentals can break down very quickly. Anyways, what were you saying here, G95? That's why I say Trump is good and even historical for what he exposed and represented, but he isn't the answer, like something. Well, yeah. Well, and there's a couple of things. Is one of the problems that you're always going to get when you have an outsider come into government, or you get like a let's call him a revolutionary. Can I call him a revolutionary? Is that they might not understand the system as well, and so a lot of the things that they want to change might be things that do need to change, but they end up being much more difficult to change than they expected. Like, I think the thing that Donald Trump fans did not pick up on, that I really wish they had over this whole thing, is that it's not just the swamp guys. Like, they think that the only reason that all of these policies continue to be in place is because the rich are paying off senators and are protecting their interests and yada 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 yada. But it's not just that, guys. Like the system, a system will perpetuate itself. The system is the way that it is because the laws of nature kind of give it the propensity to be like that, right? So there are certain things that you want to come in and quote unquote change. It's kind of unrealistic to change because it will, even if you're able to change it, it's likely to go back just because the dynamics that made it that way in the first place are likely to continue, right? You have something, you change something, and then like it completely changes the dynamics of the system. That's a completely different thing. But that's not what's going on with the kind of the issues that we're dealing with today, right? And that's why for as many things as it seemed like Donald Trump was doing that was like really upsetting liberals at the time and everything, now at the end of it, it's kind of like, well, what's different, right? So I'll give you an example. Here's a place where he can totally change it, right? Is immigration, okay? Because so corporations want more immigration because they want cheap labor, but it seems like that at current that's just not really working for them. Like they've had cheap labor for so long, and workers are pushing back, right? Workers are pushing back, and Donald Trump put, it took him the whole 4 years, but he kind of solved the immigration problem. And then Biden came in and threw that all in the trash, and the immigration system went to crap again. And now he wants to open the borders up again. And everybody, even Democrats in Congress, are like, dude, what are you doing? Don't do this. This is a dumb idea. Right? The dynamics there have changed, haven't they? Maybe another Republican gets in. Let's say Ted Cruz wins in 2022. I'm still of the opinion that Ted Cruz is your best contender. Okay. He could come in and day one, he could re-implement all of Donald Trump's changes and the border will be solved for 4 years. And then after that, oh, you're not going to touch it after that, right? You're not going to touch it after that. But what are some other things? What are some things? Okay, but like the CIA, for instance, like the deep state working against Donald Trump. Well, why does it work like that? Why is it that the deep state was literally undermining the acting president and like spying on his campaign and things like that, right? Because that's probably the biggest legitimate complaint against the swamp that the Donald Trump supporters have, right? Why does that happen? Well, first of all, if you're liberal, you're more likely to work in government. Your conservatives that sit and trash government all day, unlikely to go and seek a job in government. Whereas liberals kind of take a different kind of approach, right? And a person that's in government is likely to want to continue government power because they see usefulness to it, or they see their own power and influence as being attached to how much power and influence government has, right? So you can't just come in and say, "Oh, I'm going to clean the swamp and all of these swamp creatures, we're going to get rid of them," and think that like that's going to solve the problem, right? No, you can't. Well, what do you do about that? Well, for starters, you're going to have to try and convince more conservatives to work in government. That's a hard pull, right? You see what I mean? You've got to think about systems. See, 300 years ago, when it was the French Revolution, when it was the American Revolution and the French Revolution, because this is really where the seeds and all of the philosophies that underlie the basics, the core founding principles of our democracy were all formed, right? And back then, the conflict was that there was an aristocracy and they were doing things that were counter to what the working class and working and middle classes wanted and needed. And so they overthrew the aristocracy. Yeah, good deal. The simple solution, right? The problems today, it's not the same thing. The problem today is the whole system. There are places where the whole system, and it's not like the system is inherently bad. There's lots of really great things about the U.S. system. Oh, sorry. So you say we should get rid of this two-party system? Well, this is a really great example. Okay, there's a lot of really great things about the two-party system. Okay, the two-party system is the major contributing factor to why America is able to remain so conservative relative to Europe, right? Because in Europe, they have the multi-party systems and parliament systems. And in those systems, the socialists win out. And that doesn't happen in the US two-party system, right? The US two-party system also prevents policy changes from being enacted too quickly, right? But I admit there's problems with it. Does getting rid of the two-party system solve all of the problems? I don't think so. But if you want to get rid of the two-party system, it's a big lift, isn't it? Isn't it? Because the way that America is structured kind of lends itself towards there being a two-party system. Really does. Like a bad plant. Oh, come on. Some things aren't so bad. Man, the whole time that it was up here above 2.88, I was thinking, well, I still think that overall I want to see treasuries back off, but there's no way I'm going to stand in that momentum from them dropping. Now that it's at 2.87, I'm like, oh, I could have taken it. But I'm also sitting here thinking, well, what if I was in it? What if I was short at 2.88? I'd be thinking, oh, okay, I got 6 ticks, but I'm not able to get 10. And it could just as easily flip back on me and go to another new high. So I think that it's still better for me to kind of chill out and see what's going through here. So I'm not really seeing like really strong auto correlations in the order flow and the cumulative deltas. Most of my correlations are kind of all sideways. The S&P 500 has dropped a little bit, and we are seeing some downward pressure in Bitcoin as well. You gotta, think again that if Bitcoin were to drop to a new weekly low, that would be extremely damaging technically, especially if they fail to get above 40K and then they break a new low. That would really hamper the sentiment in Bitcoin, and they watch those technicals a lot, right? Policy change might be slow, but Democrats have figured out how to get around that by rapidly changing demographics irreversibly. Yeah, well, that's always been a thing, right? Yeah, that's always been a thing, but I don't think it's so simple, right? Because the demographic changes that the Democrats have been trying to enact are not actually helping them out, are they? Right? Young people. So Democrats are really facing like a real problem here, because they built this coalition really based largely on demographics, and then once they built it together, the demographics don't come through for them, right? Youth are not turning out to vote for them. Latinos are starting to turn away from the Democrat Party, and even a lot of African Americans are starting to turn. Like, they still have a dominance over Black people. That probably sounded bad. That the Democrats still largely have the support of the Black community, but it's like not as high as it was. It's like it's 5% lower than it was. And the way that things are right now, like losing that percentage for Democrats is like really devastating to them, right? I don't know how anyone keeps backing leftism. Well, I think another thing that might be going on right now, though, is that our perception of what's really going on in the country is very distorted. I mean, it's always distorted anyways, but I think that right now it's probably particularly distorted, right? They really, you know, especially over the last 2 years, right? Because after Donald Trump was gone, then they really started banning conservatives from Twitter, things like that. Like they chilled the discussion. Okay, you are not seeing on your social media the amount of discussion that you probably should and that you're used to on these subjects. And so your tendency is going to be to think that Democrats have more support right now than they do, right? Let's just remember that the polling shows right now that the Democrat Party is going to get absolutely walloped in the coming midterm election, right? They're going to and I mean it's really bad. The situation is such that it's kind of hard for them to lose as many seats as like say they lost after Obama, for instance, okay? But in terms of like the public's support of them is just completely evaporated, right? So because of what we see on social media, what our opinions are so colored by what we see on social media, and the social media has been so manipulated, our perception of that is not going to be right. I think a really good example here is like uh, the transgender issue. Okay, so Democrats have been really pushing issues relating to transgender, like the best example being allowing them to play in high school sports, for instance, allowing trans what is it? Yeah, trans women, so men that transitioned to being women to play in women's sports, right? Um, you'll see a lot of these things being pushed, and it's like, why are those things being pushed? But uh, everything that you're going to see online is kind of in line with that, unless you're going to specific forums. But when you look at the American public, and especially the working class, they don't like what they're seeing at all. I saw this. It seems like this has been the messaging that the far right has been pushing over the last few days. But they've been showing polling that shows that 20%, 20% of American youth identify as LGBT. Basically, if you're Gen Z, 20% of them identify as LGBT. Okay? Well, that can't be right, right? If 20% of the population was LGBT, the human race would not continue on. Okay, we would not. I'm pretty sure if you take 20% of the population out of reproducing, that would that would really harm our ability to keep going on, right? That stat is just absolutely striking, right? So some might say, well, they're identifying that way because there's not the stigma attached to it. I do not think that can possibly be the case. It is almost certainly the case that kids are being influenced in a way because they think it's cool or whatever the reason is, right? And this is being colored by what we're seeing on social media, right? They're seeing it on social media. Pull your referencing reflects less than 2% for Gen X, millennials, and boomers. Yeah. Well, I think what I saw was that like the younger they were, the more likely they were to identify with it. And millennials were like 10% and Gen Z was like 20%. If it was natural, it'd be reflected down generation. That might be the case as well, but I think one could argue that if you were a boomer, and you grew up with that stigma, you're still unlikely to identify, even if you are. One could make that argument, right? What is? I don't know what you want to know about them. NASDAQ killer. You're missing the point of that whole thing, which was that we don't have enough data to actually pull anything useful out. You could argue it, sure, but it'd be better. I'm just trying to give it a fair. I think that the percentage that it being 20% alone kind of suggests that something weird is going on there, right? I'm seeing it with my kids. It's like as soon as they get into high school, or sorry, not high school, as soon as they get into junior high, I'm not going to say that they consider it like it's cool to be LGBT, but basically the culture has become that good people support the LGBT movement, right? Good people support the LGBT movement. And with the way that movement has kind of worked, it's like if you are gay, you kind of get special privileges. And so I don't think that it's any surprise that you see a lot of youth identifying as that. But how does it get that way? Because it still seems like the vast majority of Americans are like, think that a lot of this stuff is crazy. Like especially the trans right, trans women competing in women's sports in particular. I don't think that the country really supports, right? But yeah, Democrats still like push it. How is that possible? Well, it's because of the dominance that they've had on social media. It really is. So you just got to remember that our perceptions can be like really easily distorted. And that is especially true in trading, right? Like attention biases are so insane. Like if you're investing in individual stocks, the biggest problem that you're going to have investing in stocks is attention biases. The stocks that you're going to be looking at, the things that you're going to be interested in are going to be the same things that everybody else is interested in. And so you always end up buying something when it's too high, essentially. Like you have to find a way to find undervalued stocks and good sectors that people aren't paying attention to. Right? Understand, I'm not trying to make an argument that like it's good or bad. I know that my audience is going to generally think that it's bad, right? I'm just trying to point out that there seems to be a pretty clear correlation about why it is that way this right now. So that you understand, because oh my gosh, I almost choked on the water there. I do this all the time, dude. Choke on water. I don't know what my problem is. I'm not trying to say that it's a good or bad thing. I'm just trying to point out how the perceptions can mess up where we think the society is going, right? Okay. So the people think that liberalism, or not liberalism, progressivism, woke progressivism has a stronger sway over the country than it does. Right? I guarantee you the majority of that 20% is young white girls. It could be the case. Because women have a higher degree of agreeableness. So a person that's agreeable is going to be more likely and more enthusiastically involved in this is the thing that seems to be really good. Right? I have one daughter that I think is extremely agreeable. But I don't think that it will turn out. I would disagree with you on. Here's what's going to happen is they're going to graduate from school and they're going to go into university and probably in the end up getting married and having kids. Like, seriously. I got to be careful. I know I'm treading on sensitive ground, is just that I think right now a lot of people are likely to misinterpret what's going on and make very poor predictions based on where they think the politics are at, right? And the biggest mistake that you guys are going to make is that you think that everything's going downhill, right? Like just remember everything that they show you on the news, because people are more moved by scary things, right? They're going to show you things that make you think that society is degenerating, okay? And you have more what is the word? You have more dopamine when you're a teenager. So the things when you're a teenager seem like they're the coolest, and everything else after that kind of seems like they're downhill. It's a nostalgia bias. So these things will bias you in thinking that the future is bleak and dissuade you away from investing, right? And what you're going to see over and over again is the market overcomes those things, right? But the current political happenings right now are kind of suggesting that stuff is like turning around. Like, in fact, I'll even make a really bold prediction here. Okay. The number of millennials that identify as LGBT 10 years from now will go down. That age group that's 20%, 20 years from now, you'll pull those same people again, and it will be less than 20%. Because it's being we're kind of in a social media bubble that is kind of at its peak and there's already signs of it deflating. Uzi says, "Oh yeah, 100%." Yeah. Now, the thing that's the big wild card here, the thing that is going to be interesting and that I don't know which way it's going to go, is how Elon Musk's takeover of Twitter, what that does, right? Does the left abandon Twitter, form their own social networks that go even further left? What do you think about the euro? I don't know. The euro has been weak lately, hasn't it? Yeah, it sure has been weak. I mean, as long as this issue persists in Russia, it's going to be hard for the euro to be really strong. But I don't see any catalyst. At the moment, I don't see any predictors of order flow for the order flow in the euro, for me to really know what it's going to be doing. You can see here today, we're in a tough spot. I wouldn't mind being short 2.88. I mean, that was the trade that I was thinking about doing, but I decided against it. And I'm probably being a little bit too cautious. But essentially what's happening in the treasury is I have so many predictors of order flow to deal with today that I'm unable to sort out what it's going to do. Because you got the Japanese yen, you've got a treasury auction, and then you've got this big miss on GDP that is maybe not as big of a miss as it seems. which way are they going to go? I'm not sure. Elon Musk was probably good for free speech potentially, but we need change. We can't go down the road of the same system and just hoping for our bill. Yeah. Yeah, well, I think that if Elon Musk hadn't have stepped in, that eventually the government would have gone the other way. Like right now you've got Joe Biden in there, and his policymakers are just doing a lot of I think frankly crazy things that aren't going to last for very long, let's say. So the future isn't blink of let's colonize. I don't get that one. He thinks it's so important for us to get to Mars, and I'm sitting here just like, you know what? If it doesn't work on this planet, then maybe let's just give up, because Mars sucks. Okay, you don't want to live on Mars. Nobody. I mean, I know it seems like a cool thing to be like with the first generation of people to live on Mars, but I guarantee you that like 5 or 6 generations from that, your great grandchildren will hate living on Mars. Okay, they'll all want to get back to Earth. Because Mars sucks. Yeah, it's coming back pretty good there. $286 is probably a. Don't think that I want to trade there. It's a potential to actually reset, maybe towards actual. No. Listen, I think you're missing the larger point here, man. It's not that bad, right? Like just think about this for a second, okay? Joe Biden is about as far left of a guy in office as you're probably ever going to get. And the only reason that he was able to get into office was frankly because of a huge fluke. And all of his policies are not going very well, right? And like the bigger thing here is that the American system, for all of its flaws, is really effective and moves in a certain direction, right? Why has America been so successful? Is it because they won World War II or something? They have a lot of natural resources. That's I think probably what a lot of the woke people would kind of try to say. But no, it's because of the system. The system becomes its own moving force that pushes things in a certain direction. And with the way that a constitutional republic is set up, that very much keeps that system in line with the, in line with the what benefits the majority of people. And it's been going for a while. Some people think that like Ray Dalio thinks that like our civilization is in decline. I don't believe those things. I don't believe those things. I think that eventually, yeah, we have some challenges, and yeah, there might be some economic indicators that are better or worse in one decade than the other decade, and all of these things. But generally speaking, we're still moving towards progress, and things are not as bad as they probably seem. If you feel like that in the United States that we really don't truly have freedom, I'm kind of like, man, what is it that you want to do that you're not doing? What is the thing? What is it that you would tell me? What is it that if you were living on Mars and Mars was a truly free, what is it that you would be doing there that you're not doing here? Because for me, it's like, oh, I would maybe go outside more. Okay. No, I wouldn't. I used to like going and sitting outside on my back porch, but now I can't stand it. Now if I like just even go outside, my eyes start to burn. If you just see what Edward Snowden and Julian Assange exposed, it really seems bad. Well, our privacy is definitely being violated. Sure, but it doesn't, at the current time, it doesn't really affect your daily life. Right? We're still at the point of we really shouldn't allow those things because somebody could totally use it to oppress us, right? We haven't actually it hasn't actually happened yet. We should be concerned about it. We should definitely be pushing to protect our privacy from the government. Yeah, we should 100%. That's an issue that over the last 20 years has kind of been put on the back burner, and you would have thought that they would have pushed back against it harder, but they really didn't. Yeah, but it's not that bad. Like, it's not, and I'm just telling you, this is not the downfall of society. We're in the last 30 years, and by the time we're all grandpas, it's all going to be blown up. No, I don't think so. Listen, it never pays to be pessimistic. Being pessimistic can protect your money. Okay, being pessimistic, like you think about it, you have a trading strategy, all right, and you see that trading strategy and you say, yeah, that probably is not going to work, and you're pessimistic about it, so you never try the strategy. Well, in all likelihood, the strategy is going to lose, and so by not trading it, you are going to not lose money, right? But you don't make money from being the pessimistic one. The people that make the big bucks are the people that are delusional enough to be positive. So, hey, you know what? Maybe things aren't so bad. Maybe our perceptions are just really distorted by what we see. Right? So that's almost always the case. Wow. What did I say 2.88? Because now they're at 2.84. Did that really drop $40? Because I was thinking 8.6 was a bad spot, and they just whoosh. Well, that's because the 30-year really went fast. Wowee. That is quite shocking. Well, it sucks to feel like I've missed out on some big moves, but I think that I'm still kind of okay. But now that we've had that move, I can maybe switch back to my original plan if we can get some good prices. I think every time that I tell you what, it's really something I find really frustrating is like when I'm really picky, right? It will often go without me. But then when I'm like, okay, like this is a situation where I can just go, right? Those don't work. It's a hard thing to tell sometimes. But you know what? This move up again, still not really accompanied by a very large change in cumulative delta in the 10-year. In the 30-year, yes, there has been some cumulative delta up, but in the 10-year, no. And this is very dramatic flattening as well. So that might be what we're seeing. So that just kind of is saying to me, yeah, you don't want to just YOLO into it on they're going to break the highs, right? Then on top of all of that, the latent liquidity through this whole range is likely to be a little bit less than what normally could be. I wish I could get into the mind of people like you that can actually make trading work. I might have to just go back to Wall Street bets myself. Well, I'm not sure that necessarily that I make trading work all the time, right? Like there's the thing is with here's the mentality that you use to make trading work. I really enjoy it and somebody has to do it. That's my mentality. Because I don't always make money. I've been doing okay. Yesterday sucked, but then we made some of it back. Yesterday I was kind of on the verge of like going back into, oh geez, this is so dumb, what am I doing kind of mode. But if markets are informationally inefficient, then what makes you think you can trade into efficiency using fragmented information which you don't really know the significance of? Well, you most of the time I think you can't, right? So you just have to remember, why is the market informationally inefficient? Because the information, the things that determine what the intrinsic value of something is, are not the things that move the price, is really what it comes down to, right? So we need to instead investigate the things that move the price, right? Which are predictors of order flow, right? Most of the time, you're not going to have enough to be able to predict the order flow, but we can, in very narrow instances, sort something out. Today is a situation where I'm not sure if we can. That's why I haven't traded it. Well, the 10-year came back a few ticks there, but the micro 10-year did not move at all. How? Well, you need to know what are predictors of order flow, right? So what are the predictors of order flow that we know, things that could predict order flow in the 10-year treasury that we know right now? We went through them. I don't babysit it because I want people to the smart people to figure it out on their own. But I already said them today, right? The Japanese yen is falling today because they implemented yield. They stepped in and did some yield curve control. Okay. We have a 10-year auction today, and we had a negative GDP. Right. So what are the effects that all of those things have? Okay. The Japanese yen being bearish is something that is going to, generally speaking, push the treasuries down. Okay. Because treasuries and the Japanese yen are positively correlated. Now, maybe all of that order flow is done, so that one might not be as useful to us, but we got to keep it in mind because that's going to be the propensity in the yen is to go down. But so far, they haven't been moving down. They're kind of on the floor. Okay. Auctions tend to be positive. Okay. Can be selling going into the auction, but then definitely after the auction tends to move up. And that's definitely been the case in the most recent auctions. And it also tends to be the case when the dollar is strong. Okay. So the auction is a positive factor for the order flow, right? And then we've got the GDP. And the GDP, it depends on how it influences people's expectations of future flows and fundamentals. So certainly when that news first came out, the market saw that as a big negative, right? Because of the headline number. But then we dug into the numbers and we saw that GDP number may not be as reflective of a downturn in the economy as it may seem, because the majority of the negativeness in it is coming from inventories building up and from U.S. exports still being dismal. Okay. But consumers especially still look really strong. Okay. So those are all things that could help us predict the order flow. Now, in this situation, there's so many that it's kind of hard for us to sort out which ones are going to be dominant, right? But those are all things that we could use to predict the order flow. Larger edges like risk premium harvesting and stacking smaller edges on top and overall managing risk as well. That is the only thing that's certain. Well, no, I didn't sell them because I can't sort that system out. No. At the moment, it's still unclear. Now having the move up that we've had kind of suggests that maybe in the long run, those bullish ones will win out, which is kind of what I thought at the beginning before we got the GDP. But that's not all hindsight. It's not all hindsight. Because there are days where we can totally predict it, right? Go back and look at the last 10-year auction. You could have just said it's an auction day and I'm going to buy it, and you would have made money. Easy peasy. You held it long enough, of course. If you were really fast, you could have said, hey, that GDP number is really bad. I'm going to buy the treasuries based off of it, and made a few ticks. Yeah, you could have done that too. But you're not going to have a trade all the time, right? I see this as, it's kind of funny because I remember when I was a new trader, like more experienced traders saying this all the time, and me being like, yeah, we know. You got to be selective about your trades. There's not always a trade out there and things like that. But man, like, it really is. Like, I see why they would talk about it all the time, because people always want me to do something. They expect me to be taking a trade the whole time. Like, there's new people that come in, they watch the stream and they're like, well, he didn't take any trades. And it's like, well, I did. I took one trade. Well, I took one trade during the session. One trade for them is not enough, right? I need to be in a trade all the time. Well, we don't have that much edge as retail traders. My nose is real. There's nothing in my nose, but it itches like crazy because of the allergies, I'm sure. We're just asking about the significance of the information at a time. Well, you're going to have to know how do you know how significant the information is, right? What makes the information significant? How many orders it triggers, right? The more orders that piece of information sets off, the more significant it is. You just got to remember, what makes the market move? Orders. Now, there are things that can create orders that can induce people to trade, right? And you can sort those things out. But you have to start with the framework that the orders are what moves it. I'm looking for my, my things, my fidget cube, and I can't find it. I don't want to have the Rubik's Cube in my hand anymore. Hold on. You're the information. Well, but okay. So I think that here's where the disconnect is, right? Is that when we say the market is very informationally efficient, right? Your first thought on that is going to be, oh, okay, so that means that there should be more edge for me to be able to pull out of the market based on information, right? Rather than statistics. Well, that is true, but there's a downside to it. The downside to it is that those informational inefficiencies, those informational edges that you can pull, are going to be less reliable, essentially, right? That's why if that were the case, then you could just always you could have a calculation of what is intrinsic value and always trade that and always win, right? That would be the ideal situation with that, is you could say, here's what the fundamentals are. Based on GDP, this is what the S&P 500 should be worth, and then trade on whether we're above or below that, right? It doesn't work, right? Because it's informationally inefficient. Orders that are completely random can move us very far away from fundamental value. So that means that you got to be careful about how you trade them, right? You should only be trading them when you really have a strong predictor of order flow, when you see something that you really know is going to trigger orders in a certain direction, and that you can get ahead of them, right? This has been a very hard week. I think Octavius has been doing okay, at least from what he's been saying. I mean, you've had a pretty good read on what's been going on, but it has been a difficult week, hasn't it? And Monday wasn't too bad, but I was really conservative on Monday. I was pretty conservative most of yesterday until a certain point. Man, this is so interesting to me that they were able to move like a whole 40 ticks. And now, even though I'm seeing like some really significant pullback, the micro's not pulling back at all. So I probably could have, if I was trading the 10-year, maybe I could have caught a little bit from that, although I don't know what I would have necessarily have done. But over here in the micros, I'm still finding it hard to really do anything. So orders trump information. So well, it's not that order information is insignificant. Like the thing is it kind of depends on what you define as information, right? But we should say fundamental. Fundamentals are insignificant. They're not insignificant. They're just not very effective predictors, right? But what you can do is you can identify a fundamental inefficiency, right? You can come in and you can say, for instance, Tesla is overvalued because people are buying it because it's the popular stock, but the stock price doesn't actually reflect the fundamentals. The PE ratio is so high that the earnings will never actually be able to reflect that, okay? So you could definitely identify a situation where Tesla is overvalued compared to the market. But can you just go short based off of it, just the fundamentals, and expect to make money? Well, a lot of people tried to do that and lost money off of it, right? But what you can do is you can come in and you can say, okay, because of the fundamentals, if there is a situation where Tesla falls because it is no longer popular with the public or whatever, then maybe I can jump in on it, right? I need to have something that tells me that right now at this moment that there's going to be selling. And if there is, then I want to jump on it because I'm expecting that I'm going to get more out of it. Right? There you go. So really it all kind of matters. Like you need to understand all of it and you can use all of it in your edge, but it's never as simple as, okay, this means X, this means Y. I want to go long, I want to go short, right? You have to factor in all of this information to really, what's the thing that matters? What are the orders going to be? You've got to take all of that information together to try and sort out at that moment, are the orders in the next 30 minutes going to be more buy or more sell? And if you don't have if it's not clear, then don't take a trade. Right? Now, when you get a move like we've had now, because they came up, the treasuries came up pretty strong, right? Could be one of two things. One, we missed it, right? That we actually did have enough information out there to know that the orders were going to go in that direction, right? Or it was just a random move. I think in this case, the former is probably more likely than the latter. But because of the liquidity, because of how much it moved off of the GDP news and everything else like that, there is probably some randomness in here. So we can't completely rule that other one out, right? And this is where it gets to the fun part, because then what we can do is we can watch the order flow that came through, and we can form theories. We can say, okay, why did this order flow move? Well, here are the things that we know that are going on, right? And what might be evidence that we see in the order flow that suggests it's this? Well, let me look at correlations. Is the reason that we've had downside movement here this morning because of the Japanese yen? Japanese yen hasn't moved very much, so I don't think that there's a whole lot of support for that theory, is there? Right? So then we get into our two remaining theories, which is there's an auction today, and so we have had some up movement that and that up movement seems to be very well. Let me see here. Yeah, I'm gonna say that movement has largely been the treasuries moving on their own. So I think that that supports the theory that there's going to be buying today because of the 7-year auction. Right? And then we've got the GDP one. Well, the GDP has maybe gone both ways. So that one kind of becomes a scratch. Right? Why do I have a new number on my main Gmail? I forgot my password and they're not sending it. Oh, and maybe you got hacked. That sounds bad if they're not sending it to your phone. Now they coming back hard again. Well, do you have a second factor authentication enabled on your Google account? If you don't, you really should. And don't have it attached to your number. So like there's two ways of doing two-factor authentication. One is that you have you use the authenticator app on your phone, or you have a little key fob that reads the number out to you and that's what you put in. The other one is that they send you a text message and you put the number in that they sent the text message to, right? Well, the one where they send you the text message, never do that, because all somebody needs is the information about your SIM card, and then they can spoof being your phone. And so they could set up a situation where, they request Gmail to change the password, and then they ask, okay, but before you do that, you have to authenticate with your phone, and then they just spoof being your phone. So don't use that. That method of security is ineffective. I'm actually surprised that websites still allow that, but if that's what happened, though, you would be able to see evidence from the phone company that your SIM card is being spoofed or something, because they would be able to see activity from your SIM card from a different location. Damn, you didn't know that? Oh yeah, that's well, for a while when we were doing QA stuff, a lot of what we did was with cybersecurity. I think that if I moved over into the cybersecurity realm, I would be like a junior level, entry level cybersecurity kind of person. Okay, but I had to read a lot of what do we call training documentation to know what all of the different types of attacks are and how they're categorized and how they do threat assessments and all this sort of stuff. I'm not that important for someone to spoof my SIM card. Well, the reason that by the way, good morning, Hedge. Wait, are you? I've always seen you here before. I had a friend from way back when I played Unreal Tournament named Hedge. So that kind of stands out to me. Anyways, the reason, the thing that kind of brought that whole attack vector to the front was because some people had their cryptocurrencies stolen from them because of that. So I tell you, if you're like a long-term holder, the only really truly secure method of saving your Bitcoin is to print it out on a piece of paper and put it in a safety deposit box. And then any other kind of digital sign of it, you got to delete. I haven't been here just going through YouTube. Well, I'm glad that YouTube is still recommending the stream to some people. You don't have crypto either. No. This guy, I don't know what his opinion on crypto would be. But, we played Unreal Tournament is what we did. This was like 12 years ago. This was a long time ago. Man, I haven't done anything. You know what? Yesterday, I watched Twitch streams so that I could get Overwatch 2. But then I didn't end up even playing it. I totally forgot about it. Like, I didn't even think about it until just now. But I'm kind of sitting here thinking, oh yeah, I could play Overwatch. That would be really fun. But then I'm kind of like, yeah, but I don't want to spend my time doing that, actually. I want to spend my time making videos and studying for the Series 65 exam. Oh, Seth, you've become so boring. That's what you want to do with your free time, is study for the Series 65 exam? Well, that's what happens when you get old, I guess. Something that I think a lot about recently. I don't know why, but like with this YouTube channel, I've been pretty consistent. I mean, I don't put a video out every week. Sometimes I don't have the ability to put a video out that week, right? But I've been awfully consistent, haven't I? We've been doing this live stream every morning for the last, 5 years? And that's really impressive consistency. We have thousands of live streams now, right? But I think about so many other things that I've done in my life where, it was kind of into the thing for a while and then I moved on to something else. It was like with Unreal Tournament. Well, I kind of gave up on that because the game wasn't doing very well. We were making some content for Unreal Tournament. I had the choice to go and make content for Fortnite, but I wasn't interested. That probably would have been that was probably a missed opportunity, but I'm okay because I really just don't like that game. But I could have stuck around and learned more about Unreal Engine and be making big money from putting out my video game. That's always what I wanted to do. But I didn't. The finance has been the only thing that I've really been able to be like super hardcore consistent with in my life for some reason. Got to make sure that I do this test, because my tendency is going to be study, read the book and do like the baseline stuff and then never actually take the steps to like actually taking the test. I got some time. I think I want to take it after the baby is born, and I'll have some opportunity then to study a lot. So okay, I keep the Warren Buffett idea: invest in what makes sense. So if it doesn't make sense to me, I don't focus or spend time there. I prefer equities, and that's just me. Yeah, that is a way to, if you're going to invest, that's investing, not trading, right? If you're going to invest, then the position that you should take is look for things that are undervalued, and you might not necessarily have a catalyst, something that you think is going to bring the market back into fundamental value, but that's because you're going to plan on holding it for like 30 years or whatever. And over the course of 30 years, that edge should be able to win out. You can't do that on a short time frame. If you're going to day trade, if you're going to do intraday trading, you have to be able to look at the order flow and say, okay, what are some things that will affect the order flow at this particular time? So they came back there. It's already flipping back up. The volume in the 10-year is actually kind of down. The S&P 500 is looking weak. I didn't even realize that it's 8 o'clock. They've been weak ever since the open. Let's see here. Going from this point, no, that doesn't quite. I was wondering if it was equity correlation that seemed to be pushing us up, but that wasn't the. Maximize your time before the baby is born. Well, so the good thing for the channel is that the baby might actually make creating content a little bit easier. Actually, the baby has made, like, all of the videos that I've put out the last little while. I've had it much easier for me to record because my wife hasn't been working on the weekends, because she's on leave right now because she's too pregnant. She's too pregnant, so she's on leave now. And when the baby is born, I'll take at least that first week off. So that's going to give a lot of downtime. Now, of course, most of it is probably going to be spent watching the toddler, but seeing like lots of tweets come through now at this time, but even though there's not really much fundamental news coming through, like I'm not hearing anything on the news squawk. It's just a lot of, what do we call it? Pop culture news sort of stuff, I guess. Oh, you know what? I think that I might have a problem with financial juice not running, so let's make sure that's done. Interesting that that order stayed there at 14.5. Oh, your girlfriend's photo are in your Google photo? Oh, jeez. Yep, I got a bunch of, I tell you what, I just keep having ideas for videos. I think one of the things that really keeps me going in terms of like a YouTube channel about this sort of thing is a good idea, and we can continue to grow and we should keep doing it, is like that I just always have infinite ideas about what to talk about, right? So I need to make a better video about getting started in futures, because I still get questions about getting started that, you know, I don't think I do a good job, especially like the thing I want to address in that is like how do you start building a strategy? And that's where we got to teach this stuff about the nature of market efficiency, the nature of order flow, and how it's the orders that you're really trying to predict, right? So I'm going to make that next. I think I'll be recording that this weekend, although I still need to finish writing that. And then I also have a video about the options gamma video. We need to have that. I'd love to see all that. Well, for you, G95, you should if you're watching the live stream, you should already know all that, because it's basically digesting everything that we just talked about there, right? About the nature of the market being more statistically efficient than it is informationally efficient, and that really to make effective trades, you have to be able to predict the orders instead, right? That's what I'm going to say. So you probably already got that part. But then, yes, the gamma one, that will be a good video. Although if you're interested in the gamma and you don't want to wait, I can direct you towards some resources that help teach you a little bit more about that. And then I also need to make a video about bonds, because we'll talk about things in the bonds when they're relevant, but I've never made like a video that really tells you there's all the stuff that you really want to know about how bonds work. Do you look at Prem? No, I'm not sure what you're talking about. Is that the digital platform for premium finance? Nah, that can't be. I'd like to know more of your discretion in relation to news and overall seasonal effects. Oh, wait. If you find an exit on an exchange traded product going for price discovery, aka going above previous all-time high. Sure. Oh, how do you find an exit on an exchange traded product? Okay. So here's how exits works. Okay. What I like to really watch the order flow, right? And if we're trying to predict orders, right, we have something that is going to predict that we're going to bust a new all-time high, for instance, right? Really what we're saying is I see something that is going to predict future orders, and the number of orders that are going to come is going to be enough that it's going to push it to a new high, right? So the best thing is if you can quantify that orders. And I think the best way to do it is like with a cumulative delta thing. So what you want to do is when you start the trade is you say, this is what cumulative delta is right now. Based on the current liquidity conditions and so forth, this is how many, what the net change in cumulative delta that I'm expecting to see, right? So if I think that it's a really, really big, important piece of news, or we're like in a really significant place, I might expect to see a change in the 10-year treasury of about 50,000 contracts. That would be a lot. Like a change of 10 to 20 is about an average move. Okay. So that's the first thing is that you're going to see, okay, I bought in, and now since I've bought in, cumulative delta has changed by 50,000, right? Then I might want to think about getting out, because if that's how much I thought was going to come through, right? But sometimes you get more than you expect, and sometimes you get less than you expect. That's something that's really hard to predict exactly, right? So then the next part is that you want to understand some things about the order book that can kind of help you optimize your entries and exits, because the market has a tendency to generate liquidity holes. We talk about this a little bit more in the video about the stylized behavior of markets. But essentially, if a lot of orders all go off really quickly in one area, then everybody that wanted to get in that area has already done so. Right here, I draw a picture. So if we come in and we say, okay, everybody, in 5 minutes, we're going to do an auction. You all put your orders in, and then in 5 minutes, we'll match them up. Okay. It's called a wall region auction. So when people submit their orders, it's going to look something like this. The further out away from the current price you go, the less people that are going to be interested in, right? That are going to be interested in it. So that's why it's kind of a lower further out. And then the closer we get, right? And then there's going to be a point at which, you wouldn't want to sell it anymore. These are people that want to sell it, right? And then, it goes too low, you don't want to sell it anymore. So that group of people peters out, right? And then you're going to have one going the other way for the buyers, right? It's going to be like this. Okay. So that's what our auction looks like. That's what the orders that come in looks like. Okay. So when that happens, these guys right here in this overlapping area, those are the people that get filled. Those are the people that get filled. Okay. And since the people at like the peak of both of these curves are the ones that are getting filled, there's a lot of volume that transacts there. Okay. So now if everybody that didn't get filled, now we're going to say, okay, now in 5 minutes, we're going to have another auction. So if all of the people that didn't get filled last time submit their orders again, and we're only just factoring in those, what will it look like? Well, it's going to look like this, right? And then there's going to be a dip in the middle where the people were filled, and you get this. Okay. Can you see that? Let me do it. Let me do it over here. You got here's where but then these guys got filled, right? And then you get this again, right? And here's the current price, right? So there's not going to be a whole lot of liquidity in this center area because those guys were already filled. And what does that mean? So if a large swath of buyers come up, right? More next auction, more buyers come in close to the current price. Well, it's going to require a lot of buyers to overcome this little mountain here on the outside, and same on selling, right? And so this center area, this valley in the middle becomes a hole that price will get stuck at. And the best way to identify this hole in the 10-year treasury is that you will see they won't put up very much liquidity at that location. I'm not seeing it at the moment, but say we come down to 09. 09 might be a good spot because there was already a lot of volume that traded there. You'll come down to 09 and you'll see, hey, they're only putting like 50 contracts up. It's like they'll sell it and then they'll offer 50 contracts, and then somebody will buy those 50 contracts and bid 50 contracts, and it's only like 50 contracts, and it's just going back and forth, and it's just stuck there for, like forever. And in the treasury, when you get a spot like that, that can last like 45 minutes. Like on average, it's going to be like 30 to 45 minutes that it's going to be stuck in that area. Now, if there's somebody out there that really, really wants to buy, he might have enough to buy to take it out of that hole. But what he tends to do is he tends to wait for that hole to kind of heal itself. So he kind of waits the 45 minutes. Okay. So if I'm in a treasury, I'm in a trade, let's say that I had gone long, it comes up here, and then I'm going to see a spot where a ton of volume trades. And then I might see a little extension above that, and then they get sucked back into that hole. And then I start to see that evidence that there's low latent liquidity in that location, right? What have we formed? That's a liquidity hole. And at that point, if I'm scalping, I'm usually taking my profits there, because even though I know that maybe if I really strongly believe that there's going to be another leg, like this is a really strong thing and there's way more orders out there for this, and it's going to continue later. Like I think that the price is going to look like this, right? Oops. This time period right here is like 45 minutes, right? So do I want to sit in it for 45 minutes? Probably not. Then probably I want to get out where the liquidity hole is. And a lot of volume is going to end up trading in that liquidity hole. So you're probably going to be able to get a fill really easy. And so that's why I very often will use those locations to exit trades. Okay. So those are two things that you can kind of use to help you determine when you want to get out of something. Yeah. Okay, now G95 asked about your discretion in relation to news and overall seasonal effects. Well, so you want to go through at the beginning of every day and just identify everything that you can think of that is going to be potentially moving it. Now, usually when you're reading your news squawks and things like that, that's going to give you some of the major factors, right? But there also are going to be seasonal effects. Now, if you work for a firm, the way that you do it is they have like a spreadsheet that will kind of show you the seasonal effects tendencies in your instrument. That's probably something that we should work on, but I don't have anything like that at the moment. But the general way that it works for the treasuries is that the most active time of the year is like the first 3 to 4 months is usually the most active time for treasuries. There tends to be a little bit of like reversion going into May and June. Then you get the dead months. Things tend to be really dead during the summer. Okay. Then September and October, you got to watch out because sell-offs often happen in September and October, right? And then you kind of got a little bit of opportunity perhaps in October and November in the treasuries, although I wouldn't say that it's necessarily one way. And then, but once you get into November, that's a shortened month because of the holidays, and December is definitely a shortened month. But going before Christmas, you can get moves because there tends to be end of year rallies, right? So that's kind of what you would be looking at on the yearly cycle. On weekly cycles, just remember that Wednesdays tend to have more activity because it's like they come in on Monday, they call their clients and say, hey, we want to do a trade. And then on Tuesday, Monday and Tuesday, they plan the trade out and present it to the client, and the client says, okay. And then by Wednesday, they're ready to execute it. And that's why you see more activity on Wednesday. So those are some things that might help you. These are all things I'm giving you like a ton of edge here, but I'm okay giving you all this edge because I think that I can sort it out better than other people can. Right. But that's kind of the game. That's where you want to go to. And I share these sorts of things with you because I want to give you the kind of ideas, because then what I'm hoping that you do is you go and say, oh, well, what about this? Maybe this could be something that predicts order flows. Well, let's test it and see if we can find evidence that it does. And then if it does, we could potentially factor that into our trading, right? Problem is when price is going to go in your favor, it will do if you stay inside the trade because price moves and pops, not in trends. Well, okay, so there is a large degree of movement that happens very quickly. Yeah. So I think that really comes down more to your entry, which is that if your entry is based on you just saw activity that really gets you excited, you're more likely to like get stuck in those liquidity holes and stuff, right? So it's better to have an idea of which way the flows are going to go and take it when it gets dead. Like it's been 45 minutes. It's been 45 minutes in that liquidity hole, and then you take the trade, right? Oh, program buying the futures minus cash and pocketing the difference. Yeah, I think that's much more a thing in the S&P 500, and I don't trade those very actively anymore. But I think if you're going to do those sorts of things, you would want algorithmic support. And the problem that I've always had with those sorts of things in the S&P 500 is that I don't have good enough data on the other side. Like I got really good data on the futures, but then I don't have the data on the cash side to see what is the actual accurate cash price right now. So I'd imagine you can find spreadsheets like these. I don't know about publicly, but that's what we would want to be sorting out. And I think that if I was going to do it, I would want to do it by order flow, not necessarily price. So I would want to say on this day, how many more market sells did we have or something like that. I don't know. I don't know. It'd have to be complicated, but I think that there is some like advanced statistics that they use to make those things that I don't understand yet. Okay, so I was just thinking about something. What do we got? 8:21. This session has gone by so fast. I've been yappy. Well, it might just be better for me to not take any trades. If we just come out, I would like to make 10 more bucks. Yeah, I think I do have to learn to make one, but dude, there's so much to learn, man. You know, so what they talk about, like the pit of despair, you know, futures trading. You think that it's going to be like this, and then you're going to plateau. But actually, what happens is like this. You don't know anything, and then you kind of have this kind of thing, and then you realize, oh, I actually don't know anything. And then maybe you get there, but you never quite get there. I don't know. I think that I'm right here. Like, I think we went through a period where it was really hard to like. I was like, I'm looking for something new. I know that what I have now is not enough. What do we need to do? And so we learned a bunch of things that really kind of makes the path clear. But then all that does is it just makes you aware of all of the things that you don't know and that you want to go and learn. I was like, I really wish I should be a PhD student is what I should be. I wish that I was paid to just study the statistics, you know? That's what I would like to do because I want to spend way more time than that. But the way that I've been approaching things right now is I put that time, I'll have one project, and then I will, and then I have the videos, right? Because I know that the thing that is the most valuable, that's going to help us out the most right now is building the YouTube channel, right? And you know, the YouTube channel will be able to open up avenues for us later on when we build a large enough audience to be able to spend more time on those kinds of studies, right? And it does work. I mean, it's not, you got to be careful about like, well, okay, if you come in and you only try and use a statistical inefficiency, it didn't say that it didn't work. It said they're very difficult to find. It's very difficult to find a statistical inefficiency that you can just trade that one thing and you'll be profitable, right? That doesn't mean that you can't combine some of the statistical inefficiencies that you can find, a bunch of small ones, and combine them together with the informational knowledge that you have into a more complete system, right? Because what we know about the inefficient nature of markets suggests that there are times when markets are going to do things because of just self-excitation and so forth, right? Because of technicals, essentially. So understanding the seasonality, yes. But at the same time, when you're looking at like seasonality, that's really not a statistical inefficiency. It's really an informational inefficiency to some degree. Understanding your product enough to know its seasonal tendencies. It's something that it's a piece of information that not all participants in the market will know or understand. But yeah, we build the channel up. We'll have time to work on those things more in the future. Like, look, I'm only 35. We've got a good 25 years left of this. And the channel's been doing really well. We're almost to 8K. We're halfway. We're 60% to 8K. I don't know if we'll break 10K by the end of the year, but it's possible. We get some good videos coming in. If you had to combine poison with its cure, how would you know which one is a poison and which one is a cure? Well, that was, you'd have to verify. Yeah. So when I come in and I say, okay, you should factor in seasonality, right? You're going to have enough information to prove that the seasonality effects that you're talking about are really actually consistent effects, right? And you might go in and do the study and find that it's a wash, right? But you have to find empirical evidence about each individual part of your system, right? If you have empirical evidence about every part of your system that shows that there is actual, that it's a real proven behavior of the market, okay, then you can combine them all together. And, you know, that doesn't guarantee that all of them together is going to work, but I guarantee you can have a lot better of a chance of having success with that than just reading what people on Reddit say. Right? How do you find that to develop knowing and say, I don't know. I don't know how they calculate it, G95 or 59. I really don't know how they calculate that. I've seen that, like, from time to time, Zero Hedge will post something from an analyst, and the analyst will show it's like these charts with, well, it's like this table with like months, and they're like colored and stuff. I don't know how they make those. I don't know anything about the seasonality behind it. I do know, just based on having traded this for 5 years, there are some things, especially the one that I'm absolutely positive about is that there is more activity in interest rates at the beginning of the year. Oh my gosh, there is so much more activity in interest rates at the beginning of the year. Those, like, that first week after the first non-farms payroll number of the year tend to be really big days in treasuries. Lots of people make their decisions about what their asset allocations are going to be and so forth for the year at that time. You can't. Why not? There's quite a bit of science about being able to isolate individual variables in complicated systems. But this is why it's really good to rely on research studies, right? Because it's a lot of work to do all on your own. Well, the market's kind of suggesting to me that if we wanted to go short the yield here, that 2.86 would have been the best price that we would have gotten. What you're saying doesn't make any sense, Celine. S&P 500 is getting creamed here, man. They're back below 4,200. Anything below 4,200 is kind of scary. So GDP plus yen plus earnings. Well, but so then don't take a trade. Right? If the only thing going on in the market today was a 10-year auction, 7-year auction, then I would say you're probably best off looking for longs in the treasury. Right? If that was the only thing going on. Sometimes there's so many things going on that you can't sort out. It out. Just depends on the day. But I think in this particular situation, I think that we can say that the yen is not really... Well, actually, the yen did move lower here. That's actually really interesting. When we moved lower, the yen moved lower. So we really do have probably all three going in, and that is kind of leading to a lot of random action. Depends on what? Depends on what's going on. Sorry, you're going to have to think a lot. Right? Depends on the day is not scientific. Well, there's always going to be a limit to how far the science can take you, right? We can come in and we can say that scientifically the Japanese yen is correlated with treasuries, for instance, right? Right? But if it was already proven science, then everybody would have traded it already, right? Kind of the whole thing is that these things all combine together into a really complicated system that people don't completely understand. And your job as a market maker is to understand the things that affect your instrument better than other people, so that you will have an edge over other people in knowing what the orders are going to do. Right? You're not going to get it right every time, because if this was really perfect, then you would know which way it's going to go and you'd have 100% win rate, right? But the good news is that the margin of error for us is actually pretty wide when we're doing this. Is that if we really do have an edge, we can win like 50% of the time and maybe make 1.5 to 2 times our winners than compared to our losers, right? And then that can be very profitable if you can keep those numbers up, right? And what your win rate is going to be dependent on how well you understand that market. But that's the weakness, right? Is that sometimes you don't understand what's going on. Sometimes it's hard. Today, probably you could have pulled some money out of the market, but it's a little bit random, isn't it? It's a little bit more challenging of a day, I'd say. The S&P 500, though, looks mighty unhappy, and the treasuries seem to be getting a little bit of a flight to safety bid now because of that. Like, we had a move down in the end that pushed them down, and now the S&P 5. Oh, okay, is something happening? Am I not getting my financial juice streams? Because, okay, Germany no longer opposes embargo of Russian oil imports, says the Wall Street Journal. Okay, well, that's probably why the S&P 500 is falling here. or that might be a factor in why the S&P 500 is falling here. I want to know exactly what it is that I don't understand. When I don't understand before the markets, even though about trading, trying to make me not understand. Well, a lot of that is experience, right? I think the biggest mistake that retail traders make is coming in and saying, all I need to do is just trade technical analysis, because you're spending all of this time reading charts. And what you should be doing is you should be going through and saying, okay, what moved today? What were some of the drivers that might explain that move? Right. And you going through your theories about what are the key drivers in that market, and doing that day after day after day. And you do that every day for years, and you're going to develop a pretty good intuitive understanding of what predicts orders in your markets. And most retail traders come in and intentionally ignore that stuff and waste years of time, learning probably the most important thing that you can get, Want to kill the markets? Well, let's just temper our expectations, right? Even when we're really good and we got a really good edge and everything, it's always hard to trade, right? I don't really like the time of day. I'm thinking that if I could get short 2845 or maybe 2844, that it would be worth taking a trade. Well, not like that. Not like that. But I don't like the way that they filled that 844 there. But it's so close to when I typically stop trading. I'm not sure that it's worth taking the risk now. So I think that today I gave you guys a lot of value. I can see so a good amount of people came through and were watching and stuck around. So it sounds like you guys did feel like you were learning and you were getting some information. So I'm glad. We don't have to take a trade every day, right? And today, maybe today is a day that it's just best to just not take a trade. I don't know. You had too much coffee today? Maybe. You're definitely more active today. But is it you like end work early today or something? What's with that? Man, yeah, oil just like took off there. They're kind of retracing now a little bit. And I'm seeing some dollar strength coming in too. Oh, okay. You just didn't work today. Anyways, I also, so I have all those educational videos, and then I still have a couple of other ones that are kind of more like, how much money do you need to trade futures? I think that that's a subject that we could go into. But we need to spend more time talking about like the specifics in the market and going for the more general audience too. Because man, if we were able to build a more general audience, like this channel could get huge, like finance is a huge subject. Day trading treasury futures is a super niche subject, but it gives us incredible insight into the rest of the financial system, and financials is like one of the biggest subjects out there. We need to start doing what you said and just watch an instrument and actively create theories instead of just reading. Yeah. You gotta say why are those orders coming in? Right? Like I'm feel there's some evidence to suggest that the movement that we've had since about 810 or so has been flight to safety risk from the S&P 500 falling, because they look pretty correlated during that time period. Not really seeing much else going, but now that oil is going, right? Now that oil is going, the talk of a Russian oil embargo seems to make markets nervous, right? Let's come in here. It is imminent, huh? So that's why you'd really would want to be long oil, huh? Well, how crazy could it get over there in oil if hmm, the spread here is pretty tight in micros? Can see though that nobody wants to bid at 845. Well, let's just since I really don't feel like, I want to work. I want to focus on work, and I don't like when I take a trade this late and then I want to try and hold it. Could sell that 845 right there. So let's just kind of keep that in mind, and let's just see in the next 20 minutes if we get some continuation of this. Well, what will frustrate me is when Nasdaq Killer starts to ask questions that kind of seemingly don't make sense. Because sometimes the way that he asks a question will prompt a really good discussion that a lot of people can learn from. But then he'll start taking it further and further and further until it's just like he's trying to confuse people or something. Dang, no fill? 70 and no fill? Oh. Okay, but I could have hit the 845. It would be in the money. That's because the S&P 500 went to a new low awfully fast. Wow, okay. That's weird. Some guys trading there at 8.4. I'm trying to think here about, so one of the things still is that I'm not seeing the cumulative delta go positive yet. I do think though that with the way that they're going here right now, that probably before the end of the session, that we will see that. We could have gotten a little bit, but it's coming back for us. Wouldn't have taken profits on that if we had gotten in. Forex Live did a poll yesterday asking, is this mostly deleveraging or pricing in slower growth? And it was 50.8 deleveraging and 49.2 lower growth. Ironically, Twitter's first quarter was pretty decent for its advertising business and not promising for its new subscription service. Like it or not, Elon is stuck with the ad model for the foreseeable future, says DJ Delger. Yeah. I haven't been keeping up on. Yeah, okay, no, I think we're still okay over there though. So I did get filled there on this sim trade, but not necessarily very happy about how it's going, right? You don't want to see them be hitting into the next price. It's kind of starting to roll over, which maybe suggests that the S&P 500 is finding a floor, but I'm still super tempted to click in here. But look, if we had 845, that wouldn't have been good. That position relative to the other volume in the session isn't the best, right? I'm not even sure if 8.5 is good. Yeah, they're just slicing through me, huh? Well, I'm gonna puke. Puke the sim trade. Yeah, we had a good run on the 10-year. That's the first loss that we've taken in a while, and I didn't leverage up on it or lose very much from that, so it's fine. It's fine. We're fine. I'm fine. Everything is awesome. Sometimes I'll have people follow or do respond to my stuff on Twitter, and I look at their profile and I'm like, "You're a robot." Crap. Freaking robots. Tired of the freaking robots. They coming back hard here. Are they doing this because higher oil means more inflation, meaning you're going to have to raise interest rates more aggressively? That could be taking over here. Because from that perspective, well, 8.5 would have been better, but from that perspective, a buy here isn't too bad. Fundamentally, I think the Securities and Exchange Commission and the CFTC lack that capacity to regulate this new innovation. Oh yes, so that's what we need. The existing regulatory agencies don't have enough manpower to police it. So we need to create a new agency. Surely they will have more manpower. What? Really what he's saying is, I want to continue to scam investors, and the CFTC would prevent me from doing that. That's what that really means. Look at that. 8.6. Ooh, that's aggressive. I'm seeing the Japanese yen falling there too. Have to watch. So it seems like the volume in the treasury is not there, but the currency correlation might be pushing them down. It's kind of a combination of the Japanese yen and maybe concerns about higher oil prices right now. Da-ba-da. Are Canadian home prices rising unusually fast? Probably. Hmm. I am seeing them trade here a little bit. Always enjoy this. Thank you guys so much. If you guys enjoy it, make sure you leave a like. That helps the channel out a lot. Go and watch our old videos and leave comments on them, man. Leaving comments on individual videos helps the channel out so much. Yep, there's another little push. This is kind of one of those ones where it kind of feels hard to try and take a trade, but okay. I think I'll even do that one if they so choose. I mean, I still got a chance to go long 8-6 here if I really want to, but the time of day is not very good, right? Okay. So there's quite, what the heck was that? Did you see that in the 5-year? That was kind of weird. Like flipped up and down really, really fast. I've never seen that before. That was really weird. I don't want to see this now, what they do. They're saying it to me. They're like, Seth, yes, yeah, sure. 286, we'll let you in. No, I'll pass. Maybe, I come back 30 minutes. Maybe I'll feel better about it. But right now, the timing's just not good. I took the sim trade though. No fill on the bottom side though. Bunch of, by the way, all of the oil companies report on Friday. That will be interesting. Wonder if they do that on purpose so that there's, liberals don't spend all week talking about how much money oil companies are making. Ah, there we go. Oh, that's interesting. Kansas Fed Composite Index out early, actual 25, forecast 35. Hmm. So I'm reading this Reddit. I'm getting into the Reddit early. I shouldn't be. Yeah, I'm already losing my focus. You're going to do this. You want liquidity in an index that's less likely to be moved around by a single name. That would be MES, but you're going to need something far more mathematically sophisticated than breakouts or technical analysis. I agree with them, but that kind of makes me wonder, okay, what would those things be? If he has some things that he thinks are good. Let's see here. Our frugal jobs, the economy. Well, I don't see him posting on the quant ones, so. Kind of looks like they want to move back up from here. I don't know, but I think it's time to. Do you like to spend a week with Tom Baldwin, the flipper? Well, only if he's still like with Tom Baldwin. Don't you mean Trotter or whatever? Hold on. Oh, he was a bond investor. I would love to. Sounds like he's probably still alive. Founder of the Baldwin Group. He took advice from a friend and moved to Chicago with some trading knowledge from a few courses taken at graduate school. Due to a high inflation in the U.S. in the 80s, hedgers and speculators preferred trading in treasury bonds. Baldwin followed this trend. Hey. Baldwin experienced success as a bond trader and leased a seat on the Chicago Exchange. Hey, yeah, we do want to talk to this guy. What prompted you to bring that up? It's like a new name and everything. Yeah, well, if you send me stuff on Discord, it sounds like this would be somebody that would be awesome to talk to. Oh, hey, we got some good fills there. I'm liking that. He currently serves as chairman of the Baldwin Group, the parent company of several investment and financial services. There you go. A treasury, bond futures proprietary trading company, and Baldwin Managed Futures, ACDA. See, those two. Those are the things that I want to get involved. That's what I want to do. Sounds like he's still alive. Cool. Oh, he did he was covered him in Market Wizards, huh? That's cool. Oh, is that NASDAQ Killer? Who is that? My new name, yes, didn't realize my other fun name went to my work emails as well. What was your other fun name? Dude, I liked that. What happened there with that? My averaging in there. Oh, follow the FX. Oh, okay. Gotcha. Oh, right. I've been talking to you on Discord. D1. Oh, okay. I gotcha. I was wondering when you messaged me last night. I was like, why did he change his name? Who is this person? I always so something you might want to keep in. I don't keep this in mind when you talk. Just ignore it. It's a Seth problem. But I get a lot of people on Discord trying to message me and stuff to try and trip me up on things. So I'm always like, especially when somebody messages me for the first time, I'm always like super suspicious of what they're doing. D is here to stay. Okay. Well, yeah, if you can get me in contact with them, you'd have to, for something like that, they would have to be able to do something to prove to me that it's them. Like the best thing is Twitter. There was some people the other day that were like, "Oh, I'm from this other YouTube channel," and I was like, "Well, first of all, I don't think I can collaborate with you, but second of all, you need to do it on Twitter because I can't verify who you are through email." Got you. Man, that went. I mean, it's only 6 ticks off of 8.6, but yeah, I love the new. Now he's sending me a link to No BS day trading. That's a great website. I kind of started. With that. Chief executive. There's another guy named Thomas J. Baldwin that is president and board member of Benihana. No, that is not with Baldwin. Oh, the best interview in that book is with Tom Baldwin, and it's the one that Jack Schwager thought was the most irrelevant to his trader. Not his fault, though. He just didn't get it. And to be fair, the book was written before electronic trading exploded, so at that time it was irrelevant to most. But knowing what Tom was talking about is why most lose money day trading. Yeah. Oh, okay. Yeah, I see what he's saying. I wonder that too, though, right? A lot. These people that have been successful, they say that it's off of technical analysis, but I really wonder how much of it really actually is, because they might be using a lot of fundamentals and not realize it. But on the other hand, it could be the same for me. Like I might be using technical analysis more than I realize, because I mean, I definitely can look at a chart and know what the technical analysts are going to think about it, right? Hey, it's time for me to get going. Let's change the title here. Advance GDP disappoints. Okay. But maybe I should go find that book. I'll see you guys tomorrow, Friday. In the meantime, stay profitable, friends.